Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, we've been talking about annuities, and just before the break there, I wanted to share a couple of things. Let me see. I've got so many pieces here that I want to share with you. One of them is another piece from Nationwide. This is about building a retirement savings plan with growth potential, and this gets into a little bit more about fixed index annuities. So I'm going to, if you'd like, in any of these pieces, we're going to have another one. Let's see here. Nationwide, just the facts. We're talking about Simply Speaking here earlier. Well, this is the piece for that one. And then again, the Annuities 101 piece, Ibbidson's report. Again, we've got a lot of extra information, or a lot of pieces that we can share with you to help you further your study here on understanding how these work. And again, if you want some help, some personal, for your personal situation, you can call my office. If you'd like to just call and ask some questions, just call and schedule a phone appointment with me, and I'll be happy to help you rather with that. If you've got some questions about some annuities you already have, or whether or not annuities might be a good fit for you, we can help for that. They're not for everybody, and certainly one of the biggest thing I see is people buy an annuity thinking it's going to do one thing, and they just got the wrong annuity, you know, and it's not a good fit for them, and it's not going to perform for them in the way that they need it to for their particular goals. So if you'd like to get, again, a more specifics on how to make sure you've got the right product for your needs, the right plan for that matter for your needs, you know, we can help you with that. All right, lifetime income. Here's what annuities can provide. Lifetime income, legacy planning, spousal opportunities. So Annuity 1 can provide a guaranteed lifetime income for both you and your spouse. Okay, so you can get double income. So if one predeceases the other, the survivor would continue to receive that income for their lifetime as well. Legacy planning. Annuities can help you increase. We've got some annuities, for instance, that are specifically designed for legacy, and they basically increase the amount of the death benefit, as well as some of them will even have long-term care benefits tied to that as well. So again, it's finding the right fit. We have a product, for instance, a company called Allianz, great company. This is one that has a really good product that does provide long-term care benefits, as well as for legacy, it does a great job. So here's where you can have income guaranteed for a lifetime, and it increases, still tied to an index to the market, right? So that income is going to increase over your lifetime, and if you in need of a long-term care, it would double the income for 5 years, right? And then it would revert back to the original sum, or the half part, if you will, for the balance of your lifetime. And if you've got 2 lives on there, for 2 lifetimes. So this is a great plan, or one of the ones that is a really great plan for those looking for long-term care, for legacy, as well as just want, you know, a guaranteed lifetime income that will increase over their lifetime. And this is one of those where you're starting out with maybe, you know, 5 or 6% drawdown instead of just 4 or 3 or 2.5, right? So where you can get a lot more income on a guaranteed basis, meaning for life. You know, one of the things we'll get into a little more detail with has to do with how this works and how you can end up getting multiples of what you've even invested out over your lifetime. All right, so annuities are flexible. So as an investor, you're in control. You have flexible timing, flexible opportunities, flexible options, flexible withdrawal rates. You can turn income on and turn it off again. There's so many different ways that you can use and utilize annuities that can be, again, very flexible. Now, here's something to keep in mind. Friendly fact, right? Annuities are designed to be long-term investments. So ask a financial about any short-term limitations you could consider. So most of them will allow you a withdrawal rate of, and it could be anywhere from 5%, let's say, to 10% a year, penalty-free, that you can take out. But understand, again, this long-term investment concept. And if you're an investor and have been investing for retirement, you know the value. When you're investing for life. All right, so you need to be thinking long-term as far as the way that works. So let's take a look at that next slide, and this is showing basically on these long-term investments, there's both the potential negative is if you need more income than is going to be available to you penalty-free, or if you're going to need that money in a shorter term than the contract term. So again, it's important to match up the right product. If you are going to need a big lump sum out of that fund, let's say, or that annuity in the next, say, 3 to 5 years, then you don't want to take an annuity that limits you to 10% a year and have it tied up for 5 to 10 years or more. So this is one of those areas, again, it's matching up the right product with your particular needs. So let's take speaking of products, let's look at the 4 types of annuity. Oh, one other thing, by the way, on the long-term factor, think about this. One of the benefits of it also, and I think it was Roger Ibbotson that talked about this, and I think Robert Shiller is another one that mentioned it, and maybe even Jeremy Siegel. These are all, Robert Shiller, Nobel Prize winner from 2013, developed Shiller Cape Index. It's one of the indices you can get in some annuities, and one in particular, a company called Athene. Another one is Jeremy Siegel, Wisdom Tree. They do mutual funds, but they're also developed a Wisdom Tree Index for index annuities, another great one. And they talk about one of the values, if you will, of them being a long-term contract is that it keeps you disciplined, right? It makes sure you're not going to, what do we just say? Safe withdrawal rate. If you're taking out without any downside protection, if you were taking out 4% a year, as an example, and you're going into a bear market, you could put yourself at risk. Especially, I think Tony Robbins in his piece showed at 5% how someone would run out of money over their lifetime retiring into a bear market. And this was called sequence of returns risk. I've shared that with you many times. Point of all that being how to safely withdraw the amount of money you're going to need in retirement, and maybe an index annuity is a way to give you a base in there where you can have that guaranteed income stream to help you out, and that keeping you disciplined and not taking more than the safe wallet drawdown or the guaranteed drawdown is to protect you and make sure you never run out of money. All right, 4 types of annuity. Let's take a look. One of them, immediate guaranteed. Now this is where I want that income to start within the year. Okay, so if I wanted to start within the first year that I take it out, I'm looking at an immediate annuity. It can be converted. We're taking basically a lump sum of money. We're going to write a check for how much ever, depending on the amount of income we're needing, and we're going to put that give that to the annuity company, the insurance company. They're going to then guarantee payments, and again, these will begin within the first year. We've used these many times. Usually I have them start within 30 to 60 days of taking one out. And what we're gearing it around is sometimes we use it for short term. You can get guaranteed lifetime income. But you can also get, let's say if you just need an example, someone retires early before they're starting to collect Social Security, and they want to put a base of income down there until Social Security starts. So maybe they need it, say, for 5 years. So we'll do a 5-year payout on an immediate annuity is one option, and get them the income they need. There's some others you can do it with deferred annuities. If you already have annuities, we can sometimes use these for income needs in the same way. Now you have also what are called fixed annuities. So fixed annuities we talked a little bit about with the 3 worlds, and on a fixed annuity now you're getting guaranteed interest, right? But with a less chance for growth. So you got the guarantees, but it's a fixed amount. It's the one up to the right there. So the fixed annuities, unlike the fixed index, which we'll get to in a moment, fixed annuities, guaranteed interest rate, market without any market participation, your principal investment is guaranteed. So with fixed annuities, again, kind of like CDs, set amount of interest, set period of time, and at the end of which you can either renew it or take your money and do something else with it. Now we have variable annuities on the left there, and on a variable annuity, bottom left, this is the one we talked about that's tied to the market, has sub-accounts. When I say tied to the market, it's actually invested in the market more directly through the sub-accounts. So here you've got the risk of the market, and you also have, with variable annuities, again, higher fees than if you invest outside. They're just different mortality charges and different things that they have. So you typically see 3 to 5% for fees. And to reduce those fees, you might, in that situation, you might be better off just to go directly in with mutual funds or ETFs that have lower fees. All right, fixed index annuities. Protect your principal in a down market and also provide some opportunity for growth. Guaranteed protection with growth potential tied to an index. We've been talking about some of those different indexes. A lot there. So these are the 4 kind of categories, if you will, how you use them. And you can mix and match. You might be able to use more than one variety of that. But again, it's finding the right one for you, because even within those 4, there are a multitude of different products. I think it's over 1,000 different products out there, at least, just on the index side. So one of the things you want to look at is how can you get the best fit for you, and I'm going to help you with that right after this break. Join us here. We'll be right back on the Retirement Report.